Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book. A Complete Guide to Volume Price Analysis. Read the book. Then Read the Market by Anna Coulling is a practical trading and investing guide focused on understanding how price moves in relation to trading volume. Rather than treating charts as purely visual patterns, the book frames volume as the missing dimension that can reveal intent behind market moves, helping readers distinguish between genuine participation and low-conviction swings. Coulling aims to bridge the gap between theory and real market reading by teaching a structured way to interpret candles or bars alongside volume behavior across instruments such as stocks, futures, forex, and CFDs. The central promise is to make market action more logical, to spot potential accumulation and distribution, identify likely reversals or continuations, and time entries and exits with greater confidence. Written for self-directed traders, the book emphasizes repeatable observation and disciplined decision-making, encouraging readers to build a consistent approach to analysis rather than relying on tips or prediction. I will give you key takeaways from this book. Firstly, why volume matters and what it reveals about participation. The book centers on a simple but powerful idea. Price alone is incomplete because it shows what happened, not how much effort or commitment was behind the move. Volume supplies that missing context by indicating activity levels and, by implication, interest from larger and more informed participants. A rising market on expanding volume can signal broad participation and conviction, while a similar rise on weak volume may be more fragile, driven by a lack of sellers rather than strong buying. Conversely, sharp down moves accompanied by heavy volume can suggest panic or aggressive distribution, whereas declines on light volume may reflect temporary pullbacks. Coulling's volume price analysis approach encourages readers to treat volume as a confirmation and diagnostic tool, not a standalone signal. By comparing the relationship between candle or bar spread, closing position, and volume level, traders can infer whether a move is likely being supported or rejected. This framework pushes readers away from purely pattern-based interpretations and toward a more evidence-led reading of the auction process, helping them assess whether apparent breakouts, trends, and reversals have credible participation behind them. Secondly, interpreting price action with volume, effort versus result. A recurring theme in volume price analysis is the contrast between effort and result. Effort is represented by volume, while result is expressed through the price bar or candle spread and where it closes relative to its range. When the market expends high effort but achieves limited progress, it can hint at hidden opposition. For example, heavy volume that produces a narrow spread and a weak close may indicate selling pressure absorbing buying, even if the session ends up. In the opposite case, a wide spread and strong close on solid volume can indicate decisive demand. The method trains readers to look for mismatches, unusually high volume without follow-through, or large price movement without supportive volume. These mismatches can foreshadow turning points, pauses, or false breakouts. The book also encourages consistent contextual reading, meaning signals are evaluated relative to recent bars and typical volume for that instrument and time window. This helps traders avoid simplistic rules and instead build probabilistic judgments. By repeatedly asking what the market had to do to achieve the observed move, readers learn to spot strength and weakness earlier and to anticipate where price is likely to struggle or accelerate. Thirdly, accumulation, distribution, and the story behind trends. Coulling's approach helps readers interpret trends as more than directional lines on a chart. Trends often begin and end with phases where professional money builds or unloads positions over time. Accumulation can appear as a period where price struggles to fall despite negative news or repeated selling attempts, often with notable volume as buyers absorb supply. Distribution can show up as a market that appears strong but fails to progress despite heavy activity, suggesting selling into demand. Volume price analysis aims to uncover these phases by examining how volume behaves at key areas such as prior support and resistance, round numbers, and zones of repeated testing. The idea is not to predict with certainty, but to read the evolving narrative, who appears to be in control, and how that control changes as price approaches important levels. By learning to see accumulation and distribution as processes rather than single signals, traders can become more patient and selective, waiting for evidence that a new trend is being prepared or that an existing trend is running out of sponsorship. This topic also connects to risk management because recognizing late-stage distribution can reduce the temptation to chase extended moves right before reversal risk increases. Fourthly, multiple timeframes and market context for better decisions. A key practical takeaway is that volume and price signals become more reliable when placed in proper context. The book emphasizes reading the market across multiple timeframes so a trader can align the shorter-term trade with the bigger picture. Higher timeframes can reveal major zones where institutional activity is more likely to leave footprints, while lower timeframes can show the detailed behavior of volume as price interacts with those zones. This top-down view can prevent common mistakes such as buying into resistance simply because a lower timeframe looks bullish, or selling into support because a small chart looks weak. Context also includes understanding typical session behavior and liquidity differences across markets. For instance, volume characteristics in equities differ from Forex, and futures have their own rhythm depending on contract and exchange. The method encourages readers to focus on relative volume changes and consistent comparisons within the same instrument. The result is a decision-making process that is less reactive and more structured. Identify where you are in the broader map, watch how volume behaves as price approaches key levels, and then refine entries and exits with signals that agree across timeframes. This reduces noise-driven trading and supports more disciplined execution. Lastly, applying volume price analysis to entries, exits, and risk control, the book's aim is practical application, using volume price analysis to improve timing, reduce false signals, and manage risk more intelligently. Instead of treating entries as guesses, readers are guided to look for signs of confirmation such as increased volume on a breakout with supportive closes or evidence of rejection when high volume fails to push price beyond a level. Exits can also be informed by volume behavior, including climactic volume that may indicate exhaustion or warning signs that a trend is losing sponsorship. This approach can help traders avoid staying in positions when the underlying pressure shifts, even if price has not yet reversed dramatically. Risk control is reinforced by the idea that every signal is probabilistic and must be paired with position sizing, stops, and clear invalidation points. By defining what would prove the analysis wrong, traders can limit the damage of inevitable losing trades. The framework encourages consistency, using the same observations, the same comparisons, and the same decision rules across markets and setups. Over time, this can turn volume price analysis into a repeatable checklist rather than an emotional interpretation, supporting steadier performance and better psychological control during volatile periods. In conclusion, this book is best suited to active traders and serious investors who want a clearer framework for reading charts beyond standard indicators and pattern names. Beginners can benefit if they are willing to study carefully and practice, while intermediate traders often find it especially valuable because it adds a missing layer to what they already know about trend, support, resistance, and breakouts. The benefit to a reader's life is practical, better decision-making under uncertainty. By learning to interpret whether price moves are backed by real participation, readers can reduce impulsive trades, avoid many low-quality breakouts, and manage risk with more confidence. That can translate into fewer emotional swings, more consistent routines, and a more professional relationship with markets. Compared with similar trading books that lean heavily on lagging indicators or rigid chart patterns, this volume price analysis approach emphasizes cause and effect, effort versus result, confirmation versus deception, and context versus isolated signals. It also travels well across markets and timeframes, making it a versatile toolkit rather than a single system. For readers who want an evidence-led way to read the market, it is a worthwhile purchase. If you would like to support Anna Coulling, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.